We're jumping straight into new era energy and digital today. Everyone is watching the price action, but the real story is the massive pivot to AI data centers in the Permian Basin.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And before we really get going here, make sure you hit subscribe and hit the like button. It helps us keep bringing you the breakdown on companies that are actually shaking things up.
Yeah, it really does.
So let's unpack this. Because when I look at this company, New Era Energy and Digital, I feel like I'm looking at well, shapeshifter, honestly.
Shapeshifter, yeah, that's a good word for it.
Right, because for the longest time, this was just, a standard energy explorer. We're talking helium, natural gas, drilling holes in the ground in New Mexico and Texas. If you looked at them 2 years ago, they were a pure commodity play.
That's right, just a resource play.
But now they are practically shouting from the rooftops that they are a digital infrastructure company. They aren't just selling gas anymore. They want to use that gas to power the brain of the internet.
Yeah.
It's a massive identity shift. It kind of feels like a bakery suddenly announcing they're going to start manufacturing jet engines just because they have a really hot oven.
I love that analogy, but I mean, if we connect this to the bigger picture,
Right.
It's a shift born out of absolute necessity. And honestly, a massive market failure. You really have to look at the macro context here.
Okay, lay it out for us.
The world is running into a wall, and that wall is electricity. We have these massive AI models, the hyperscalers, the big tech giants building data centers that consume power at a rate we have literally never seen before.
We hear about the power crunch all the time, but is it really that bad? I mean, can't they just plug into the grid like everyone else?
No, they really can't. And that's the critical point that people miss. It's not just that the grid is old. It's that the queue to get plugged in is effectively frozen. We are talking about physical constraints that money just cannot instantly fix. You have high-voltage transformers that currently have 3-year lead times.
Yeah.
You have transmission studies, which is literally just the paperwork to ask if you can connect, and those take 2 years.
So it's a bureaucracy bottleneck.
It's physics and bureaucracy. If you are a hyperscaler, think the biggest tech companies in the world, and you have billions of dollars worth of AI chips sitting in a warehouse losing value every single day, they aren't running, you cannot wait 5 to 7 years for a local utility to upgrade a substation.
You have the Ferraris in the driveway, but you have no fuel line.
Precisely.
Yeah.
And that is where New Era's strategy stops being just a corporate buzzword and starts being a survival strategy for the industry. They're betting on vertical integration.
Because they own the source.
Right, they own the energy source, the gas and helium reserves, and more importantly, they own the land. We're talking about roughly 137,000 acres, including the Pecos Slope field.
That is a massive footprint.
It's absolutely huge. And the strategy is, instead of pulling the gas out, putting it in a pipeline, selling it to a utility, who then turns it into electricity and sends it over transmission lines to a data center.
All those steps.
Right, New Era is saying, why don't we just build the data center right here, right on top of the gas field?
Which cuts out the middleman, the transmission lines, and most importantly, that 5-year waiting period.
Exactly. It creates a moat. By owning the energy and the dirt, they can offer these hyperscalers a timeline that a pure play data center company just cannot match. They're basically saying, we don't need the grid. We are the grid.
That's why it works on paper. But let's talk about the scale, because this part genuinely blew my mind. I was reading through the details on their Ector County, Texas project.
The big one.
Yeah, they recently acquired the remaining 50% stake in Texas. Critical data centers essentially taking full control. And the capacity target they are throwing around, beyond 1 gigawatt.
1 gigawatt.
Let's just pause on that number for a second. Because 1 gigawatt sounds cool, it sounds vaguely sci-fi, but in reality, that is an absurd amount of power. That's not just a lot. That is roughly the output of a commercial nuclear reactor.
It is massive. To give you a sense of the density, a traditional data center from 10 years ago needed maybe 5 to 10 megawatts. We are talking about a facility 100 times that size.
So this isn't a server room. This is a city state of compute.
Correct. If you think about it in terms of AI hardware, a modern rack of servers creates a heat density we have never seen before. A gigawatt campus is a strategic asset on a global level. There are only a handful of sites in North America that can even theoretically support 1 gigawatt of power today.
Right.
Owning one of them fully permitted with fuel on site is like holding a royal flush in a game where everyone else is begging for a pair of twos.
And the market is definitely noticing. I mean, we saw that price action recently with intraday gains hitting almost 24%, touching $5.64. That is the kind of move that says investors are waking up to this scarcity value.
It's proof of breakout momentum. The market is starting to price in that this land isn't just dirt anymore. It's the foundation for the next generation of the internet. But there's another layer to this bull case regarding management.
The recent hire.
Yes. On February 2nd, 2026, they appointed Charlie Nelson as president and COO.
Right, the new boss in town.
Why does that matter? Because until now, you could argue this was just a plan on a piece of paper. Bringing in a COO specifically to drive this growth phase signals a shift from planning to execution. They're gearing up to actually build this thing.
Okay, but here's where I have to push back a little bit. I was looking at their filings and I saw a stat that made me stop cold. This company, proposing a nuclear-scale project, listed only 7 employees.
7.
7 people. You just compared this project to a nuclear reactor. How on earth do 7 people oversee a multi-billion-dollar infrastructure build without the wheels falling off? I know people talk about lean operations and operational leverage, but that doesn't sound like leverage to me. That sounds like a skeleton crew trying to fly a jumbo jet.
It's a very valid fear, and it sounds crazy on the surface. But you have to look at the model they are using. New Era isn't trying to be a construction company. They aren't swinging the hammers.
So they are the architects, not the builders.
Essentially, yes. They are the general partners. They own the assets. They structure the deals. They've brought in partners like Primary Digital Infrastructure to handle the hands-on build-out. They're essentially a holding company for these massive assets, orchestrating the deal.
So if it works, the profit margins per employee are astronomical.
That is the textbook definition of operational leverage. They aren't burdened by thousands of middle managers. If they pull it off, the upside for shareholders is diluted across very few operational costs.
But that brings me back to if they pull it off. Because execution risk is sky high when the brain trust is that small. If Charlie Nelson gets the flu, does the whole project stall?
That's the exact risk. When you are that lean, you have zero redundancy. One key departure, one mistaken oversight, and $1 billion project can spiral out of control.
If it works, that's the magic phrase, isn't it? Because right now, everything we've talked about, the nuclear scale power, the vertical integration, is the dream. It's the brochure. But we need to look at the flip side.
Let's break that down even further, or look at the flip side of the coin here. Because you're right, the dream is priced into that recent surge. But the reality of building infrastructure is messy, and it's expensive.
So what's the bear case here? What keeps you up at night with a stock like New Era?
The first thing is simply that execution risk we touched on. We have to be honest, this pivot is in the early stages, extremely early. We are talking about blueprints right now, not buildings.
We haven't seen the cash flow yet.
No, we haven't seen specific Q3 2025 revenue figures detailed in the filings that show this data center business is generating cash right now. It's one thing to acquire a stake in a company called Texas Critical Data Centers. It's an entirely different thing to pour concrete, install liquid cooling systems, and get the servers actually humming.
And doing that takes a staggering amount of money.
That's the second pillar of the bear case. Financial health and dilution. Data centers are incredibly capital intensive.
Yeah.
We are talking millions. We are talking billions to fully build out a gigawatt campus.
And with 7 employees and a background in gas exploration, they don't exactly have billions sitting in a checking account.
No, they don't. And if you look at the recent 8 key filings, specifically around January 20th, 2026, you start to see how they are planning to pay for this. There are mentions of unregistered equity sales.
Which is a fancy way of saying they are selling stock to raise cash.
Which is a nice way of saying dilution. If you are holding the stock today, your slice of the pizza is getting smaller every time they print new shares to buy concrete. It's a necessary evil for growth, but it puts a massive lid on the stock price if they do it too aggressively.
I also saw the phrase off-balance sheet obligations in there. That always makes me nervous. It feels like financial gymnastics.
It's common in project finance, but you should absolutely be wary. Think of it like co-signing a massive loan for your friend, but not listing it on your own mortgage application.
You don't technically owe the money unless your friend stops paying.
Bingo. New Era is likely using special purpose vehicles, separate mini companies, to hold the debt for these data centers. It keeps the main company's books looking clean, which is great for the stock price today. But if those projects go over budget, or if the construction stalls, those obligations come home to roost. It adds a layer of invisible leverage that retail investors often miss until it's too late.
So you have the execution risk of can 7 people build a city, and the financial risk of can they pay for it without washing out the current shareholders.
And then there's the macro factor, We can't forget that at its core, New Era is still tied to energy commodities. They own gas and helium fields.
Right. They haven't sold the farm. They're just building on top of it.
And that farm is subject to the whims of the global market. We're seeing geopolitical volatility specifically around the Iran talks right now. That moves oil and gas prices daily.
So if gas prices crash the value of their underlying asset, the collateral for all of this expansion takes a hit.
Exactly. Or consider the opposite scenario. If gas prices spike to insane levels, the economics might actually shift. It might make more sense to sell the gas to the grid rather than burn it for a data center. It introduces a variable that pure tech companies just don't have to worry about. Microsoft doesn't worry about the price of a barrel of oil in the same way New Era does.
That makes valuation incredibly tricky. I mean, how do you even put a price tag on this thing? Is it an energy explorer that should trade at 5 times earnings? Or is it a high-growth tech platform that should trade at 50 times earnings?
That is the central tension of the whole play. It requires a massive leap of faith on the execution. Investors are currently trying to value it as a tech startup, which is why you see that 24% pop. But if they stumble on the construction or if the financing dries up, the market will instantly re-rate them back down to a boring old gas explorer. The floor is far below the current ceiling.
It's a high-wire act for sure, but let's say I'm intrigued. I'm looking at the chart, I see the volatility, and I want to know what happens next. What should I be watching? Because 2026 seems like the make-or-break year for them.
It absolutely is. There are a few very specific things to keep on your radar over the next few months to see which way this breaks.
Okay, hit me. What's number one?
Number one is the rumor mill regarding the tenant. We have this S3 registration filed on January 23, 2026. That paperwork heavily hints at capital raises for further M&A. But the big question hanging over the Ector County project is who is it for? You don't build a 1-gigawatt campus on spec hoping someone shows up.
You usually have a dance partner picked out before you rent the hall.
Exactly. There is speculation swirling right now about hyperscaler leases. We're talking about the big AI firms. If New Era drops a press release saying we have signed a lease with, and you insert a trillion-dollar tech company name there.
The stock goes to the moon.
That is the catalyst. That is the match that lights the fuse. Until that name is public, it's all just potential. But consider the alternative scenario. What if we get to Q3 and there is no tenant announcement? What if the rumors stay just rumors?
Then the stock likely collapses under the weight of that expectation.
Correct. The silence would be deafening. So watch for any 8K filing or press release regarding a tenant or a master lease agreement. That is the single most important binary event for this stock right now.
Okay, so we're watching for the tenant. What about dates? When do we actually get to see the scorecard?
You want to watch for the Q1 2026 10Q. That's likely coming post-March 2026.
Quarterly report.
Yes. This will be the first real look at the books since Charlie Nelson took over as COO. We want to see how much cash they burned, if they generated any revenue from the early stages of the data center, and what the updated timeline looks like. It'll be the reality check against the hype.
And we should also keep an eye on that partnership with Primary Digital Infrastructure, right?
Absolutely. Primary Digital Infrastructure is the partner helping them with the actual hyperscale build-out. Any updates on that relationship? Are they accelerating the timeline? Are they expanding the scope? Will be a strong signal of health.
So what does this all mean? If I'm sitting here listening, trying to figure out if this fits in my portfolio, what's the ultimate takeaway?
So what here is that this is a classic play on sector rotation. But let's zoom out to understand what that actually means.
Give us the wide view.
2023 and 2024 were all about the chips. Everyone bought the hardware. Everyone bought the shovel makers. That was phase one of the AI boom.
The gold rush phase where anything with a chip went straight up.
Right. But now we are squarely in phase two. All those chips have been bought. They are sitting in warehouses. Now the panic isn't where do I get a processor? It's where do I plug this thing in?
So the capital is moving from the thing to the home for the thing.
That is the sector rotation. Smart money is betting that the premium on power and land is about to skyrocket because supply is fixed, but demand is exponential. New Era sits right at that intersection. It's risky, yes, but it's positioned exactly where the capital is trying to go. Yeah. They're trying to position themselves as the landlord for the AI century.
It's pretty wild to think about. You have a company that a few years ago was worried about helium pressures, and now they are holding the keys to the AI kingdom's power supply.
It's the evolution of the market in real time.
It really is. And here is where it gets really interesting to me, and this is something for you to think about after you take off your headphones today. We talk about valuation multiples all the time.
Yeah.
Tech companies get high multiples. Energy companies get low multiples.
That's the golden rule of thumb.
So ask yourself this. Is New Era in energy companies solving a tech problem, or is it a tech company sitting on a gas field? The answer to that determines the valuation multiple.
That is the multi-billion-dollar question, and the market hasn't decided yet.
No, it hasn't, and that's what makes it fun to watch. That is the lowdown on New Era Energy and Digital, the power play of 2026. Thanks for hanging out with us on the Easy Money Show.
Always a pleasure.
Make sure you're subscribed so you don't miss the next move. We'll catch you next time.